joined today by the one and only Jason Hagan with Sunrise Banks. Jason, you serve in the role of SVP, and you have an amazing title and amazing capabilities because you quite honestly are SVP of all things amazing in and around fintechs, fintech innovation, embedded finance, bank sponsorships, bank sponsors in general. How does that fit on a business card? I guess that's my first question.
I have to practice my elevator speech, and depending on the audience too. But by and large, Sunrise has, prior to me joining, been in the fintech space for quite some time. And while my title is fintech innovation, and by virtue of being at a smaller community bank, irrespective of the size of our fintech franchise, we do a lot. We've got a great team with deep, long experience in the industry. I'm a bit of a newcomer to the block, but I will help our fintech partners scale from 1 to a million. I help them with products and services, solution design, and really having a consultative role in their business as well.
Not just, we're going to move your money. We are going to move your money or help you open accounts, but we're also going to be a trusted business advisor, business resource. That's fantastic. And that's one thing that Sunrise does so well. And there's a couple of things you've mentioned, Jason, I'd love to dig into. First of all, you highlighted the fact that Sunrise in and of itself is a community bank and not one of the tier 1 banks in the country. And I mention this because I do believe that there is this myth amongst more traditional community bankers we may be reaching with this video that they think you have to be huge. You have to be a tier 1 or a super regional, even a regional bank in order to play in the bank sponsorship and the BaaS space. And I think, don't let me put words in your mouth, but from every conversation I've had with the sponsor bank, that is absolutely not the case. And I think that's what I heard you say about Sunrise, the actual asset size of the traditional bank. And when you layer in the fintech relationships, you're still a community bank at heart. Is that safe to say?
Yeah, spot on. I think the part and parcel of our thesis, or I should start maybe with Sunrise being a community bank that serves un- and underbanked communities, and started that way in the mid-1800s, serving Polish and German diaspora in and around central Minnesota, has grown over time as the immigrants in those diasporas began to become integrated with the financial system in the United States. They increasingly chose fintechs or things like general purpose reloadable cards and debit cards on non-bank financial institutions, or even stored value cards, the gift card type, as their preferred way to bank. So back in 2007 the owner of the bank, David Reiling, was very prescient and jumped into the space with both feet. And I give that background because at that time we had to build what we need to run those programs. There are software platforms available. Now there are. In a way, it's a bit scary for me because our competitive advantage, the things that we have created with our technology over the years, are now being offered by the likes of Unit and Treasury Prime and Cable and Themis, all these really new and pretty compelling technology platforms.
And at a fraction of
a lot easier now. It's easy and easier to get into the space.
Wow, 2007. You all must have been, prescient for sure, but you all must have been one of the first players in the market. And to the point that you mentioned, having to stand up all of that infrastructure and think through how the subledgering would work, how the movement of funds and integration between each partner you brought on would work. That was no small undertaking back in 2007. And here we are almost 20 years later. Can you believe that? It's an eon when you think about where we have come in relation to embedded banking. But Sunrise has always had a fantastic name in the industry in embedded, and the approach taken, just as we mentioned, with not only serving their needs, their monetary and money movement and origination needs, but actually assisting with a fintech's business cannot be understated. But my goodness. But I guess there was something you mentioned there, and I wanted to ask you as well, Jason, and it's the thesis, the purpose of the bank, as you mentioned, was to serve the underbanked communities and be of service in those areas. Do you see any bleed over into relationships that you form with fintechs? Do you actively seek out fintechs that align, or is the model a bit different on the tech
No,
side?
we do evaluate each opportunity separately, but we give preference to those that are serving on and underbanked communities. So it's not an insubstantial preference either. It's we put our thumb on the scale for those opportunities. That said, too, we don't pass up maybe more traditional fintech or bank sponsor relationships, embedded finance relationships, because we can gather those deposits and then we can loan those deposits out to the un and underbanked populations, households. So it's a good model from that standpoint. Or a different way of saying is we continue to serve those communities, but are doing so, I think, maybe in a little more unique way, or in a way that is very consistent with our B Corp, our CDFI designation, and our relationship with the Global Association of Banking Values that we co-founded a few years ago. So all of those align to really just creating products and services that better serve those communities.
And I think for any CDFI related organization or any bank with a mission, the BaaS space doesn't have to be that different than your day-to-day model, because there are a number of fintechs that are spinning up all the time that also seek to actively serve similar markets, but in unique ways. And you mentioned something there, Jason, that I think is often glossed over by traditional community bankers that might be looking for an easy reason to say no to BaaS banking. But the fact of the matter is, when you are bringing on new deposits through a fintech, those are deposits that have been sourced in an entirely new way. You've had to actively market to, or you're waiting for them to hit your site and open up an account in a more traditional way or walk into a branch. These monies are coming to you through a fintech, but still able to then be lent out to various customer segments in a more traditional banking fashion. So I think the model in and of itself around embedded banking, banking as a service, BaaS, whatever we wish to call it, however we're going to refer to it today, and I'll likely use all three, but it's just not doing things, it's doing things differently, but not that differently, in that bankers are still having accounts opened. Mm-hmm. Bankers are still sending monies on behalf of end users and or lending monies, issuing cards with some programs. So it's not that far of a deviation from business as usual. You're just opening up new channels. There are definitely more compliance aspects we always have to get our minds around and make certain that we're just dotting all of the I's and crossing all of the T's. But that is something that I often find is somewhat intimidating for bankers, that they think it's so very, very different, if you know what I mean.
You know, we share a similar perspective. I don't want to undersell the complexity of getting into the space, but if you currently have a strong compliance culture and you have folks that can speak to the alphabet soup of regs and you otherwise enjoy a pretty good relationship with your regulator, there's no reason not to explore it. It is move, store, and lend money. And as a bank, you're already good at that. It's leveraging your existing systems that you have, augmenting them if you need to, or if you're going to onboard a fintech that has substantial scale behind it. And there's things that you never want to lose track of. You know, as I tell folks immediately, is that you can't outsource your fundamental obligations as a bank. And the regulators, I don't know that they necessarily got lax in that premise. I think from what I heard and understand through my years is that their premise never changed. It was the assertion of some banks that thought that they could outsource that to the fintech or outsource that to a third party. And part of the rough spots that we're seeing in the market right now is the retraction of that thought, that realization that you have to still do everything as a bank on your core bank as you would on a fintech bank.
Yes, I think you're absolutely right. We did go through in the industry. It's been a tough year, a little over a year. We all know that the players involved that have made it a tougher year, and there was very unique elements happening at those players, and there were individuals affected and users affected, and that's it's so horrible. It's unthinkable, quite honestly, to organizations like your own or other players that follow the rules, the players that have developed compliance expertise and or really deepened relationship with the regulators, which I think you have to absolutely do. If you are an FI that cringes when your regulators reach out, or you really only want to deal with them during that audit or the compliance reviews, BAS may not be for you immediately at this time. It's something I want you to continue to look at and to explore, because I feel very strongly, as does Jason and others in the industry, that BAS is one of those elements that it's not going anywhere. It's only going to get bigger and better. And there's only going to be more and more players involved. And the great news is, as Jason and I both know from speaking to bankers each day that are not in the space, there's room. There's room for everyone out there. And Jason, I think you and I were both talking about the fact recently that when I say there's room, I mean there's room. There are a lot of fintechs, tons of fintechs shopping for bank sponsors. And no bank sponsor that I have heard of really these days is seeking to add thousands of fintech programs. Everyone understands that they have a particular niche they're going after, like those that, in your case and that of Sunrise, underserved might be a primary goal, those fintechs or other fintechs that align well with your model and your offering. But you still, I would doubt, would want to onboard 200 fintechs this year. Instead, I know this, I don't want to put words in your mouth, but I know that you even sometimes try to help fintechs that you're not able to bring on, finding other community banks. And guess what? Yeah. There's just not enough bank sponsors right now. That's what I mean by there being room for everyone. Would you agree, Jason?
Yeah, the contraction of the banks that were voluntary, involuntary offering the services. So some were subject to regulatory findings of various harshness. And there were some that also wanted to temper their risk exposure and dial back certain verticals that they were in already. And what that's led to is these established fintechs just really looking for a new home, a permanent, solid, forever home, and then backing that up with a second bank so that they don't have to go through the pain again. Now, banks are absolutely entering into the space again. It's just the ones that I know of that are doing it very prudently and building out capabilities in a crawl, walk, run manner, or very, very intentional about what products, systems, platforms, people that they hire into the space. All of the above, I think, really portends a different and much better environment, but it's not going to happen for like 2 years, maybe 3.
I agree with you there. I think we'll see some relief on that supply and demand at some point in the future as more players enter the space. Jason, I know Sunrise is a bit different in that you guys, I know it took some time. It had to back in 2007 to create the infrastructure and in the environment. I happen to be married to a BAS banker myself, and his experience from the exploration phase through getting board approval, all of the steps needed, and the selling that had to take place and internal alignments, making technology decisions, standing up a team, even post 2007, still took 3 years. Yeah. So it is something that I know conversations with people like you or colleagues in the bank sponsor space right now can help shortcut a bit, but it's still something you want to spend some time educating on. Okay. And I know, Jason, you and me, my husband, others that I speak with, you all are very gracious with your time and your knowledge in serving the space. So not that I want you to be flooded with people reaching out to find out about this space, but I know that's something that you do right now as a service to others. And I think that's very important because I'm not entirely certain that anyone has 3 years to spend getting up to speed. That the time is now to be exploring bank sponsorships. There will always be room, of course, but there's going to be a bit more opportunity, I think, for those players that enter the space now. Would you agree, or is that just?
Yeah, 100%. I mean, the reality is the more resources you devote now and accelerate that time to revenue, you're just going to be in such a better place than taking that traditional 3-year decision-making period to get ramped up. Now, I will say that there are things that we tell prospective banks that are trying to get in the space is don't bootstrap this. It's not something that you can sort of run off the side of your desk or run it under the retail deposit operations folks. It needs to have attention paid to it, and you gotta staff it appropriately. The corollary to that is you will do exceptionally well, but you're still not going to make money the first year. This is a multi-year investment because you are standing up ostensibly a new division of the bank.
Precisely. There is capital outlay required, just like if you were building a new branch, just as if you were making an investment in a new, ripping and replacing your core system and other complementary products. Exactly. It's you're shooting for the long tail. You're playing the long game with BAS. And
I gosh darn guarantee you, at least here in the Omaha metro area, that getting into sponsorship banking or embedded finance is significantly less than opening a branch, a physical spot. So
For sure. And I know that all of the players that you had mentioned previously, middleware players, RegTech players, there's also a variety that come in with different models. I had ran into a new middleware player recently that is ideally serving smaller FIs, and there's even they tout no cost, no upfront cost, which I think is such a unique model. Of course, they price and their business strategy is different, but there are multiple players, there are multiple business models. Regardless of which one you choose, have no doubt there will be an investment. But I am with you, Jason, that investment will be a fraction of building a new branch and likely have bigger dividends paid. Because when you think about a new branch going up, you're limiting yourself to a geographic area and a certain type of clientele. Versus with BAS, you're opening up the doors and those new end users are coming to you versus your fintech relationships.
Yeah. The one thing too that I think sometimes get lost, and maybe some of my sensitivities earlier in the space, but it was earlier in the days. The fintech doesn't own the customer. The bank owns the customer. The fintech is your marketing channel. And if you sort of approach everything that you do as in your partnership with a fintech is your marketing channel, and that is compliance, marketing, oversight, money movement, fiduciary responsibility or custodial responsibility for the end user, your customer's customer in a way. That's what you should really look at. And would you sink umpteen $1 million in a new branch or open up 6 or 7 new distribution channels? That's a good keystone to work off of.
That's a fantastic way to reframe the expense or the capital investment involved in it. It really is. You mentioned that an FI that wants to get into BAS does need to be mindful that this is not just something you spin up with existing resources. Now, I'm not saying, I don't want to say existing resources. I actually think it'd be much better served to say that people that have a day job as a particular element of the organization may not have the skill set that you need or want to court new fintechs, that operationalize these fintechs. There is definitely a translation of duties because you are still doing you're still doing normal banking services. But I guess the way to approach it, and you said it so much more eloquently, was you need devoted resources to the BAS division. And you were one of those devoted resources for Sunrise. You have been there now, 3.5 years?
Yeah, sneaking up on
4 years. And you came from a background of wholesale payments. Is that correct?
Yeah. So I sort of fell backwards into fintech. My previous bank, First National Bank of Omaha, has a very robust portfolio of customers that are banking fintech primarily around money movement. And it's fintech and then fintech adjacent, which are very large corporations, insurance companies, for example, as well.
Yeah,
When
great
they make
example.
a lot of disbursements, a lot of payments, or a lot of collections, either way, they operate very much like a fintech. And so their needs and wants are almost perfectly parallel of those. So gentleman there, Barry Gideon, really helped me cut my teeth learning that business. He's still leading up the sales and business development there at FMBO. But under my tenure at FMBO, I really leaned into the product and technology and service side, giving Barry more things to sell, better service levels, more features. But that's one bank that does it very, very well, but still has had growing pains because there's always evolutions. We've gone through what arguably we're on the third generation of fintech. And I remember maybe the first to second or maybe second to third sort of transition talking to our head of financial crimes, who, again, she's amazing and taught me a lot about risk and BSA, AML, KYC, KYB, and so on, all those alphabets. But the growing pains around even that, the monitoring, the understanding of the customer activities as we went from Gen 2 to Gen 3 of fintechs increased substantially. And so supporting those, it was a topic, or it's an indication of the continual investment, right? It's you're always going to have evolution in the marketplace, and again, emphasizing why you have to have dedicated people in the space.
Oh, it makes perfect sense when you line that out like that. It also, I think, makes a very good way to connect the dots in your own career, coming from that type of background, focusing on payments and fintechs, as you said, kind of falling backwards into them, and the role that you that you serve in right now with Sunrise, in that you have to understand products. You are speaking with, kind of selling to fintechs as well as being sold all the time by fintechs as well. Understanding the business case and the money movement side seems like very good attributes for ideal candidate for a bank to explore. When you look for your own staff members, is there something in particular you're looking for? Does it have to be BaaS related, or just a keen understanding of financial services or banking?
So most specifically, well, there's three different categories of professionals. I'd say if you wanted to have a hybrid person that is sales, business development, product, maybe just product strategy, even intellectual curiosity above all else. That's an attribute that serves a lot of different roles well, but in this space where you're always learning, and you have to oftentimes ask the third, fourth question to truly understand what your fintech partner is trying to achieve, or what that third or fourth question of a regulator or at the ICBA, or doing the extra reading to understand a concept that might impact the business. That intellectual curiosity is just key for those types of roles. You absolutely have to find somebody that can understand money movement and can abstract money movement outside of the traditional core banking. So there are folks that excel at processing payments as quickly and efficiently and cheaply as possible. Those aren't exactly the right role. You need folks that can understand the systems of payments and systems of money movement and money storage. And then the third is a pretty decent general counsel. So similar to the, I probably should expand it a little bit or qualify it so I don't make my risk and compliance folks mad. But similar to the frontline employee, having a general counsel that is also really intellectually curious and wants to understand with sufficient detail or even beyond what you want to accomplish is super key. Now, I am going off the assumption that you're hiring for these three, but you already have a risk and compliance function that understands that they cannot outsource or otherwise rely on third parties to do their job. So that's why I hold them separate. It's a key assumption that you already have that quality and robust risk and compliance management.
I think those elements mentioned are spot on. It's funny you say the general counsel. I had a chance to meet and have dinner with my husband's general counsel last week, and he was very gracious. There was a fintech at the table that was just there for the experience of the event that we were all at last week. And the general counsel was gracious with his time, just asking questions, causing this founder to think deeper, causing this founder to, so not even on the bank's behalf at this point, but it was amazing to see his mind work and the way that he was approaching the operation of the fintech from what would be an agreement side with a bank sponsor that the fintech would ultimately sign was intriguing to see. And I will tell you, I was happy I was not in the hot seat. It's like, this is fascinating to watch. Better you than me, sir. But something that I find that I'd be interested to know your opinion on, and it dovetails into what I believe you just said, is that the departments you've mentioned, including compliance and risk areas, when it comes to banking as a service, they may have to think a little outside of the box in that the same individuals can be employed and serve both sides of the bank if they have that skill set and if they have that interest. But I have found that there's a much deeper conversation that tends to happen with some of these roles. Yeah. And I'm not saying that the compliance or risk department would ever just hop on board with any risky fintech, not at all. But their mind tends to shift into a different gear. The conversations are different than those that pertain to more traditional banking customers because they're thinking of the fintech, they're thinking of the fintech's customers. It's an extra gear, and intellectual curiosity is, I think, key to that.
So, yeah, if you think about it from their perspective, right, even a mature fintech supporting bank and the risk and compliance folks, if you are bringing on a new fintech partner, what you're basically doing is doubling or tripling the size of the core bank right away with a very specific type of customer usually. So, usually those fintechs are looking at an underserved part of the marketplace. And so they are looking that concentration coupled with the fact they might not have as much exposure to, let's say, small to medium-sized long contractors, right? The inherent risks on the core bank side are well understood, but what are the inherent risks of bringing 10,000 of them on all at once? And so you come at it from that standpoint, and you need somebody that is, expansive and growth-oriented, but also protects the bank because there are myriad and increasingly sophisticated ways to launder money or commit fraud. And so they do yeoman's work trying to parse this huge chunk of business that's just about to be dumped on them.
Yeah, so true. They have to balance, as you mentioned, the growth because you're going to have people that want to push forward with fintechs because the business proposition is fantastic. The modeling on the financial side and what that could mean to the BAS division, it seems so attractive. That has to be modeled. They want to be in your court, but still have to make sure that they think through the sheer scale and the elements that a person like me that grew up in sales, I don't think about the riskiness of nonprofits. I'm like, these are great. Surely they have to be great people because they're giving to a nonprofit. Yeah. And they have to sit me down and say it's one of the easiest ways to monitor, to launder money these days. I'm like, but really, it's a nonprofit. See, this is why I stay in my lane, and the compliance individuals keep a finger on me. I guess just making sure I'm making bad decisions.
I probably put the fear of Jesus in a couple of folks that might be considering the fintech banking, but remember at the top, I listed a whole bunch of platforms that can automate this, that can allow you to achieve scale in 6 months that took us, 6 years to build. So don't be cognizant of what you need to do, but definitely don't be afraid. There's absolutely opportunity out there.
There is such opportunity. I guess, Jason, if I were to ask you, what is one thing you would like a traditional banker evaluating embedded or BaaS banking to know, what would it be?
Oh, traditional banker, traditional bank president, traditional commercial lender, traditional bank president, traditional commercial lender.
Let's talk about, let's say, a bank president. Let's say the C staff at a bank. They've been content with the traditional model, and they find themselves chasing rates right now, negotiating for loans, and playing the traditional old school game of banking competition. What would you like them to know about BaaS?
Yeah. So now I'm going to scare the bejesus out of folks. The fact of the matter is your customers, irrespective of how much they love you, how much they love coming in and saying hi and being part of your bank community, and they do. They absolutely do. That's unimpeachable data. They still choose other non-financial products, platforms, and services that will eat away at your business. It's inevitable, and the pace is going to quicken. We've been talking about disruption and fintech disruption for years and years and years, to the point of fatigue. It's here now. The technology has advanced far enough and cheap enough that there are any number of new entrants or even existing players in the marketplace can begin to erode your relationship with your customer. So jump back in with both feet into this marketplace and claw some of it back. If Jim and Jane, who you have watched their children grow, finance their home purchases, maybe even finance one of their small businesses, are now being bombarded with better rates from a fintech to the point where they can't ignore it any longer. And then you extend on top of that the winners, the platforms out there that are really dangerous to your business are the ones that are creating business process efficiencies for those small businesses or even a consumer. Think about, there's Bill out there and there's some others, BillGo, that automate, the back office of small businesses. And I bet if you parsed your ACH file, you'd be surprised at how many of your customers are using platforms like this. Take a look. And then on the consumer side, Target has their own app now. Walmart, of course. I believe Kroger is down the path. Ford. There is no shortage of big brand that you now have to compete with for that deposit dollar. So either you choose to directly compete with them by improving your consumer-facing digital assets, and you do that a lot, quickly, fast, better, or you choose an indirect method like a bank sponsorship, fintech sponsorship banking. And if there's a fintech, embedded fintech that's supporting Target, then why not bring that embedded fintech onto your platform? And now you've pulled back a little bit of that customer relationship, indirectly, of course, but
still,
you're not conceding to bigger brands or fintechs that can invest umpteen millions of dollars in their consumer experience across a horizon of fintechs, 352 fintechs that are simply trying to move money better than a bank can. So
it's so true. And this whole concept about looking at the competitive landscape and the way that end users experience these apps will not change. No matter how much we as bankers, and I'll include myself here, growing up inside of banking and fintech, no matter how much we want things to go back to the way it used to be, where everyone came to our digital banking app, our mobile app, in order to take advantage of these services and money movement and bill pay and other things. Those days, I would love to tell you they're coming back. They're not, because those experiences that people are having inside a Target app or a Walmart, what people are able to accomplish with the Ford app or these other components, we're not going to see the end user moving away from them. It is imperative that you at least make yourself cognizant about the space and about your own ability to be the powering tool of these providers. Because that's just it. Banks right now, we have this unique advantage that we have a charter. There's money transmitter licenses that we uniquely own and can provide these services to fintech. And that's why BaaS is such a big deal, and that we need to ensure that the ecosystem stays fed, because we are uniquely positioned to help. and each community banker out there is uniquely positioned to evaluate it. I like to say a no is okay as long as it's an educated no when it comes to understanding the shift in the landscape that you beautifully illustrated, Jason, and understanding the way that the market is going. So
I have been, and maybe there's some selection bias, but I've been pleasantly surprised at the number of community banks that have been hiring chiefs of staff or chief strategy officers to explore things like this. It's really encouraging. And so I think a lot of the messaging is getting through about community banking. If you want to persist as a community bank, exploring a bunch of different options, just make sure that embedded finance is part of that discussion.
Part of the discussion, exactly. I would include like chief innovation officers as well.
Yeah.
There's some really cool titles in banking. Way cooler than when I was in banking. Well, now that I've asked you about something you'd like bankers to know, would you be comfortable sharing a lesson learned, something that Sunrise Banks has learned that could shortcut a process for someone else?
Yeah. So our selection criteria has changed over the years, and we would pursue younger or less mature fintechs, and we believe that we're better suited to provide consultative services to like the Series A or later, some fintech that has found product market fit and really wants to engage with us on how to scale from there, and then also wants to add additional products and services.
Nice.
So there's that aspect of it, but we got to that definition or those parameters by failing a lot and not being afraid to fail. The one thing that filtered out of all of that was if they haven't hired either a full-time or fractional person in charge of compliance and risk, I'd pass immediately. Just time to. And it's not a job that's suited for the general counsel of the fintech. They need to have somebody that's focused on that at the fintech.
That's some really cool criteria that you have found. And I understand exactly what you mean by finding it the hard way. I love that you look for product market fit. In my day job, of course, what I do in a selling component for fintechs, and product market fit is one of those things that when you don't have it, it is tough. And to be a bank sponsor looking to jump into a relationship with a fintech that doesn't have it, and you're trying to create your own models to see if the relationship makes sense, I can imagine it's equally as tough.
Yeah, so we would partner up with folks that had great ideas but didn't have product market fit, and that made all the difference in our success lately.
That makes perfect sense. Product market fit's important, no matter which side of the coin you're on. Well, Jason, do you have any other upcoming events where you're going to be attending, where people, fintechs and bankers alike, might be able to stop and chat with you about embedded banking?
Yeah, the next big one is Fate down in San Diego. I think that's May.
See you there, sir.
Yeah, excellent. This will be my first one on the West Coast, so I'm looking forward.
Okay. Well,
we do need to lobby them to move that to January, February instead of May, but see what we can do.
I know.
Down there. There's one more coming up in April, and unfortunately, I just forgot the name of it.
Financial brand, maybe? Or
it's not financial brand. It'll come to me, but it's focused on payments and commercial payments, B2B payments, and which one?
I'm trying to MPC. No, I bet you're going to the same one as my husband. Yeah. And I apologize. I can't be there.
It's in New Orleans. Yeah. So
okay.
That one looks, it's a little bit newer and it looks interesting insofar as bankers that want to maybe are more comfortable in the business space and small business space. That might be one to show up and take in and listen to both some of the presentations, but there's going to be some really cool platforms there that you can take a look at and see how, one, your core bank is kind of coming under attack from these fintechs, but also could you get comfortable banking them?
I love this idea. And who doesn't like a trip to the Big Easy? Come on. The food.
I went for the first time this year. I went 50 some odd years without going there. I will go back as many times as I possibly can from here on out. What an amazing, charming city from food. And also anytime you get a great city like that, and then there's that touch of weirdness too. I love that.
I am with you. It has its own unique elements and vibes. Well, let's all go meet Jason in New Orleans, and I guess that's
Yeah,
coming up in April. I'm going to look that up, kind sir.
I'll send it over to you, and you can augment this.
I will for the
Okay.
video with the details. Jason, I want to thank you so much for your time and just generosity of spirit, sharing with other community bankers that are thinking about the embedded banking space, sharing your journey, sharing a little bit about how Sunrise Banks has approached this. And this will hopefully be the first of many times that I get a chance to interact with Jason and share his knowledge with others out there. So with that, kind sir, I thank you very much.
Thank you for having me. I appreciate it.
Thank you. Bye.